Good morning, ladies and gentlemen. Sorry about that. The stream just kind of kicked off there for a quick second, so I had to restart a new one, but that's all good. All good. Alrighty. So we're going to be running through, again, most popular stocks today that you guys are probably going to want to be keeping an eye on. All right, so good stuff. Yeah, Ian, you're not going to be able to close your position until market open. That's how options work. You're not allowed to close options out until market open. So really, we'll touch on Roku first. We'll explain exactly what's going on. I'm not sure if we discussed this just the other day, but I know we did in our premium group, but I think we talked about it here too. So the other day we saw unusual options activity for Roku, basically at the 150 mark up to 160 mark. So we kind of knew that the market was going to want to push Roku stock towards the 160 price to try and fill the gap during earnings. So it's successfully done that. So the market has done what it wanted to do. We went to about 160. So Roku now is probably going to come down. That would make the most logical sense for the market, would be for Roku to actually come down. So if you're anybody who bought, and this isn't for sure, but if you're somebody who bought options yesterday before market open, before the end of the day on Roku, and you bought, if you bought 160 calls, 157 calls, 150 calls, 148 calls, 146 calls, there's a strong chance that you're not going to make any money, actually. And that's exactly the way the market wants it. So, again, long story short, pretty much anybody who got long with options yesterday is probably not going to make any money on Roku by the time market opens. Sorry to tell you. But that's what the market wants. They don't want to pay out the premiums on all the overnight swing gap traders on Roku. The only people that are making any money on those sorts of premiums are the ones who bought the options days ago. So with that being said, I believe the markets have made the move they wanted to make on Roku up to the 160s. Anybody who is strategically playing options before the earnings a couple days ago has made money. Anybody who got long options yesterday or even puts are probably going to get crushed by the time market opens. So knowing that the markets probably want to bring the prices down, not to have to pay out the premiums on the overnight gap traders, we're probably going to see Roku decrease in price a little bit by time market opens and or when market opens, I think would be a good outlook. So that's what I kind of envision happening. If it doesn't really matter. I hope the thing skyrockets, but I just don't see it doing that. So I'm going to have to probably go with the bear side of Roku today by market open. Still ultimately bullish on the stock with their earnings and how they ramped up into. But again, they did just fill their gap up to one. They got close. The gap fill was up to 160. It got to 157. So we got close, but ultimately I'd probably be a bear on Roku today. All right. Yeah, that's, there's no reason why you shouldn't be able to close your options on Friday. That makes absolutely zero sense. Yeah, I don't know. I've never heard of that, so not sure what that would be. Doing good. I'm up like $97 on the day or something. So I'm happy. All right, CGC we'll talk about. So CGC blew out earnings, but not really. I haven't even read the earnings. I just haven't had the time. But long story short, CGC is up on earnings. It basically threw the whole marijuana market for a curveball because CGC was really getting cooked to the downside. So a lot of people were closing out positions on that, and now earnings comes back and squeezes the stock right back up to the most recent high levels pretty much. So that's a good sign for this. We're starting to get back over the median trend, sort of, a little bit. Maybe, that's arguable, but looks like we're starting to approach back over the median trend. So I think we should see some more bullish activity going into the next kind of week or so on this. I mean, I could be wrong, but the earnings there is good. That gives it some good momentum. It helps keep CGC on more of an upwards trend for right now. That most recent rollover in CGC was starting to give it the appearance that we're going to kick back into a downtrend. But this earnings pop gives us what we need to stay in the uptrend on CGC. So very nice. Do like that. I don't think I'm going to trade that today because there's other things to trade, but it's just a notable mention. And the reason a lot of people are talking about it is because it had such a strong gap right up. It's $24. It's a marijuana stock. It's affordable. That's why people are talking about it, because it's cheap-ish. Weed. Everyone smoked weed at least once in their life. If you haven't, I suggest doing it because you haven't fully lived life yet. Definitely make sure you do that. Cross it off your bucket list. You got to do it to live life. So pretty much everyone smoked weed in their life. So that means that everybody knows of a marijuana stock. So that's why there's always the hype that surrounds the marijuana stocks, okay? Tesla is another big talking point today. So we can touch on this. If you guys remember from yesterday, I specifically was saying do not short it. Does anybody remember that? Say yes in there. Not that I'm a genius, but do you guys remember from yesterday we're saying don't short Tesla. They're actually going to squeeze the stock out. Right? If you remember that, definitely give it a shout out in the chat there. Okay? Oh, yeah, you know what, Brian, that's actually a really good point. To the gentleman that had the options that was saying you can't close out on Friday, that's exactly it. I didn't even think of that at the time. But yeah, Ian, so the possibility here is that your options, if your options expire today, let me know in the comment, or Brian by B Custom, you can let him know too. Do your options expire today? Because if they expire today, then there's a good chance that nobody wants what you're selling, which means you're not going to be able to sell them. It's not Robinhood. It's the fact that you've picked an option and then it expires today. So what you're trying to sell to somebody else is worthless. That's kind of that's what it is, right? So let me rephrase this, right? So Connor has this YouTube store, this online YouTube platform, and he has a store, right? And in order and I'm going to give you a coupon, right? I'm going to give you a coupon to buy a t-shirt today, right? But it expires today, right? What's the likelihood that you're going to be able to sell that coupon to somebody else when it expires today and they live a day's drive away from the store where the coupon can be redeemed at? That's the way you should look at it, is that all options are like a coupon, right? If, again, a coupon has an expiration date. So you can go get $5 off a hot and ready Little Caesars pizza up until the end of the month with this coupon. But once that expiration date gets here and you go past the expiration date, that coupon is no longer valid and you will not get $5 off your hot and ready pizza at Little Caesars. What is the likelihood you're going to be able to sell that coupon to somebody else on the same day that that hot and ready coupon expires and they don't even have the time to get to the goddamn store because they get out of work by 12 o'clock p.m.? So that's what you're doing. You're buying options, so you're basically buying a coupon, right? And that you're hoping that that coupon that you bought will be worth more by the time you try to sell it to somebody else. But you have to make sure that the coupon you're buying ideally goes up in value. So A, you make money, but B, it has enough time left before expiration that you can dump it to somebody else, make them pay you the money for it, and give that to them. So that's the thing in options, is when you buy an option and you try to sell it to somebody else, you have to make sure there's enough time left on that option so that the new buyer feels that they can still make money, right? That's the goal of kind of exchanging options between traders too. All right. All right, so yes. So anyways, we're saying don't short Roku. So again, this is the same scenario. We're gonna run you guys the same exact scenario as Roku. So for me, I'm a trader. I wanted prices of 700, about that. I was happy with 710, 712, 720, 700, 680, 690, 650. I was happy with any one of those numbers. So Tesla, it is a bubble. Whether it crashes or continues to go higher, there's still unleft certainty. But in most cases, 99% of the time, when a chart looks and does what Tesla did, 99% of the time, it will come crashing down. So the logical play is to actually be short, not to be long. Okay, so we've had a lot of people getting short, whether that was stock, whether it was options. A lot of people betting to the downside. Okay, this move, I mean, it went from 820 all the way to 712. So in just a couple days' time, it moved about 100 points down to 700. The markets, if you look at Tesla, the most recent support system was right at about 700 with the blip here. So it's actually more like 708 was the real support there. So the markets the other day did exactly what they wanted to do. They went from resistance down to the most recent support. Since it's been such a heavily talked about stock and a lot of people know it's a bubble, you've had a lot of activity, short bias. So the market knows there's potential to squeeze traders out. That's second. 3, the markets went from 8 down to 712, most recent support. There were a lot of option traders betting to the downside, including myself. I was actually short options from previous day into yesterday's morning, looking for us to get to 700 or below 700. That would have been awesome. I knew that the likelihood we went below 700 was not going to happen. So my anticipation was to play down to at least 700. Okay? So I was right. Many of us option traders and many of us short sellers were 100% correct. But the market moved the price down to the most recent support system during after hours trading and during pre-market trading. The two most inconvenient times for options traders, because you can't close out in after hours and you can't close out in pre-market. So the number one way to make the markets do what they want them to do without having to pay out to the traders is make those moves during the after hours and pre-market trading session, which is exactly what the market did. If the markets would have opened up down at about $712 yesterday after the offering, my options trade would have been probably a 60, 50, 40 grand winner. But since they ran it up pre-market and squeezed it up into during the day, they only allowed me to make about a $4,000 win. It opened up, I was up like 6,500. By the time I could close out in candles, it ended up being like a $4 grand winner, right? Sucks. Go from having a $40,000 winner to $4 grand. But that's the way the market works. The market's job is to make sure retail traders don't make money. Because remember what I told you the other day, the number one writers of options are usually going to be market makers. So the number one job is for them not to lose money as it is everybody else. So their number one goal is to not have to pay out to options traders. So again, markets move down to 712, offering goes out, Elon Musk buys up, yada, yada, yada. They move the market as they should during pre-market after hours trading, squeeze it up during the live day so you don't have to pay out premiums on options. So the markets did exactly what they were supposed to do yesterday on Tesla. It makes perfect sense, okay? So nonetheless, I still really wouldn't be extremely long bias on Roku here, on Tesla. Maybe I said a Roku, but I meant Tesla. So I wouldn't really be extremely long bias on Tesla. This is still, again, formations of a bubble. You're pretty much you're just in a channel, right? You're just in an up and down channel sideways, right? And I wouldn't really expect a $1,000 price target until prices are getting over like 823 or, 831. So anyways, we have to do a full new analysis on Tesla here in the future. But yeah, that's all I got for you on Tesla. All right. Let me run through the next couple ones. I know I'm just trying to get through all the common stocks everyone's talking about today. NVIDIA had earnings again today. NVIDIA actually looks pretty bullish. If you look at the chart, we had a nice strong move up. We dipped down. We bounced back up. We're holding a nice little bull flag. We just broke out of that bull flag a little bit right there. So this looks decent. It's into a new high. There's no previous price action resistance. This is something where you just have to watch it long because it's pushed up into a new all-time high with a strong move. AMD's been moving strong, MU's been moving strong, NVIDIA's been moving strong. All the chip makers have been moving extremely well, so there's really no reason to try and bet to the downside on any of the chip makers right now. It's just not a logical play, in at least my opinion. So I would definitely just continue watching long bias into the all-time highs with something like NVIDIA, okay? Yeah, exactly. So same thing I said. I would not buy Tesla. Again, I don't want to buy Tesla until we get to about 650, 500, somewhere in that zone. It doesn't really matter to me exactly what the price is when we start to get the confirmation. All that matters to me is that it gets down there, right? That's a logical play. You can, and again, that's what we've been calling for like a couple weeks. We've been kind of saying that 500, 650 zone. And that's what magically, that's what like 80 to 90% of all the analysts want. Now, I'm not going to say that analysts are always correct, but when 90% of all the analysts go, nah, I kind of like it down at like 550, 560, 600, 650, then that's just telling you what the market wants, right? Because you got to think about it. If 83% of analysts want it there, that's a big number. And who has most of the money? Not you, not me, not the analyst, but the people that the analysts work for have all the money. So if they want it at a certain price, the markets will probably get it at a certain price. There's a high probability of that. Not a guarantee, but a high probability. Same thing with Roku. Roku had a gap fill up to 160. The options market was implying about a $20 move for Roku's earnings. The perfect storm and the perfect setup to use a 20-point move off earnings to gap the price up into the most recent gap fill location. Makes perfect sense, and that's exactly what happened. So, yeah, we'll still look at Tesla down the 600, 650s. That'd be the great. That's what we want. Alrighty, next one on the list. Expedia. This is another interesting one. So this had a skyrocketing earnings last night. Really great move. I really can't justify being short this with how strong we've moved up, how well we held in after hours, the fact that we kind of squeezed just right up. We're not really, we're not selling down. So for now, I can't really justify trying to be short bias on Expedia this morning. I have my theories, but that's just a theory. If you guys want to hear that, I could go into that, but I don't know. I feel like I've been on this coronavirus thing too hard lately. Maybe I haven't, but real quick, long story short, Expedia's main business has to do with travel, has to do with lodging, has to do with flights. If the coronavirus, again, continues to accelerate as it's been doing and it continues to get worse, you can expect there's going to be more travel bans put in place. And at that point, less people will be looking for vacations, less people will be traveling. There will be less people using the service of Expedia. You would naturally think that that would affect some of their income, maybe going into the second quarter of 2020. Or even the first quarter of I don't even know. Maybe the first quarter of 2020, second quarter of 2020. But that is still. But then again, Expedia is an online shopping place. I mean, they still have advertisement revenue coming in. So again, it's hard for me to justify that theory without really knowing fully where their financials come into play. So that's an early theory that has yet to actually be like researched too much. So don't take that like with too much. Take it with a grain of salt on that one. But it's plausible. It's a plausible theory for now. So with that plausible theory, right, let's say that, in fact, Expedia is going to see a negative first quarter, as I believe a lot of stocks actually might see if the coronavirus thing doesn't get settled. I don't think quarter one will be too terrible because most of it's in China. But if it does continue to spread as it's been doing, if it does and things got worse, then I think quarter two would be really bad. But anyways, let's just say for a second that things did go that route, right? Let's say things did progress and they got a little worse. This would be the perfect scenario where we would run Expedia stock up in anticipation that our future earnings will be bad, and now we can start deleveraging our positions in Expedia before next quarter. And the right thing, and that's what I would do, right? If I had a bunch of money and I was in Expedia with a bunch of money, I would want to get out. I would want to do my best to ramp that market up to a high selling point to take advantage of that short-term high sell point before fading it down, before inevitable bad quarters to come through travel bans and restrictions due to a virus that spreads globally. That's a logical theory and a logical macroeconomic play. So when we look at the charts, right? You have a big gap down, right? We bounce up, we get bought up, yada yada yada, and then guess what? Like, what's the best way to fill that gap? I mean, that's a big gap, right? That gap is from 115 to 135. It's a 20-point gap. You're not going to fill a 20-point gap in a day on a regular trading day. It has to be an earnings play. There has to be a catalyst in order to get a stock to move 20 points. What better way than to do it on earnings? So here we go. Markets use the earnings report on Expedia to run the price up, and this is giving the perfect example of using an earnings report to fill a previous gap. So I'd say right now there is a pretty good chance we see Expedia run up towards even the 135. Do we get to 135 today? Probably not. Do we go up 5 points? Very plausible. 135 entirely, I'd be a little iffy on that. But for now, I'd watch it long bias because we entered into the gap fill, and gap fills work like magnets and just kind of go. So I think right now is a good approach of while I'd probably watch Expedia long bias. All right. Next one on the list. This is a penny stock that I'm already long on. Let me guess. I'm down a bunch of money. No, I'm not. Actually, I don't even think I'm down. Maybe I am. I'm up $2. Very nice. Very nice. Anyways, this is FCEL. I took a small trade of 200 shares last night just to see if maybe it worked. But we kind of have like a cup and handle here on FCEL, the pullback. And so there's a good chance that we might even see this rip up today. So I figured, why not? It's 200 shares. If it rips, I'll make maybe $100 or something like that. Low risk play. But you got FCEL here, cup and handle formation, starting to get over resistance, holding over resistance, mind you. So I think today would be somewhat of a decent day to watch FCEL penny stock long bias because simply the formation. It's been getting bought up pretty well. We've held over short-term resistance at 211. We're still kind of grinding up here. It's probably not going to be an extremely fast mover. It's already a barcoding stock, so that's why I took 200 shares. It's probably going to be somewhat of an ugly mover in terms of how it trades, but doesn't mean you can't make money. So, only 200 shares, but maybe this is something that you guys like and would be interested in actually trading. So keep an eye on FCEL today. Alrighty, that pretty much runs us through some of the most popular stocks for today. That's not all of them that are moving, but that's some of your most popular. Okay, BTAI. Yeah, BTAI is a stock that's been just kind of ripping up over the past, I don't even know, month maybe. I have no idea why this. I seen it earlier, but I have no idea why it's up. It was a biotech, so it's a therapeutic biotech stock. These always go kind of crazy because I don't even know why. Like, I really have no idea why people like biotech stocks so much. It's probably because of their volatility, honestly. But I mean, at the end of the day, this thing was trending up, right? I mean, that's just kind of it. I mean, that was it. You were trending up, right? So that's, if you kind of put it into perspective, right, you had a bull flag going up. You kind of had like a bullish pennant formation. And you came from a dip below the median support and then came up through and ripped. That's, let me rephrase that. That's actually when you get your biggest moves in stocks. Your biggest breaking out moves don't generally come from breaking out of a top specifically. They normally come from dipping below the median average trend and then grinding back up through the median average trend and then through a top, and then they get explosive. So a lot of times if you see that you're trading a breakout and it kind of pops up and then it comes back down, it's probably just because you were trading the breakout of a resistance top, but not trading a breakout coming from below a median average and through resistance. That's normally when they get big, just like you've seen here, right? If you put a trend line through the median price action, you're going to see that you kind of resist, and then look at, ready, watch this. Resist, rip, bounce, support, right? Back down, kind of back through, kind of now you're just kind of trending, right? Ready? Down below median average, rip up through, right into resistance, doesn't quite break, right? Then you kind of go trade it again, back down below, ready? Down below median average, back up through resistance, through median average, rip. Now, of course, you can't justify that just because it did what I said, you get this big move. There's more to it than that, but you're going to get most of your big moves as your price action comes below and then up through a median trend average. Then that's where you're going to get a big move. Same thing with, like, watch, I'll show you it's the same thing on the S&P 500 too, right? So, all right, let me take that line might be somewhat, is that, I don't even know when I drew, oh, it's a daily, that's why, because it's on the daily chart, right? So okay, look. So we go down, dip below median average, resist. Dip below median average, get bought up. Again, a lot of buying. We get up, we resist, we finally get through, and boom, there's your rip, right? Bounce off support, up. So generally, the next phase of our market should probably be a down move back to this level and then maybe through for our next cyclical phase of the market. So again, it's kind of trading the markets trade in channels. That's what they do. Markets break out and break down, but ultimately they just trade in channels. And so you have your markets kind of like that. That's what your market is. So right now, we're on the high side of buying the market. Right now, you're not getting a good deal on the S&P 500 in terms of its cyclical macro moves. But in terms of long-term plays, sure, you might be buying a great price. But in terms of macro, short, cyclical play, you're on the high side of the S&P 500. And like I was saying in a video I just recently did, we still have a potential bearish divergence there, right? The markets really need to keep screaming up for this not to play out. We have a bearish divergence in effect, and the only way that's not going to turn down is if the markets just keep going straight up. But when you get the early stages of a divergence, that's basically starting to say that selling pressure is coming in, buying pressure might be slowing, and if you start to get a couple red days and it just kind of rolls over a bit, then usually the bears will come in and smoke it down. So personally, I think we could go up a little bit more, but ultimately our next stop should be that median average. I don't know how soon, how long. That's always the guessing game, but it doesn't matter how soon. It doesn't matter how long. All you got to know is that this is in a channel, and below the median dip level here is a good buy price, and above it is a good sell point if you're a macro trend trader, okay? So with that being said, guys, I'm going to get back online to our private group where Brandon is currently managing our trading room. But other than that, it was a good day. Definitely a good day here online. I appreciate you guys tuning in. As always, thumbs up the video, go click subscribe, all that good stuff. Share these videos because they're awesome. That's just simply it. These are just amazing. These are awesome videos. Okay. Chris, don't even worry about it. That's just the world we live in. It's not a big deal. It's honestly, to tell you the truth, I hardly thumbs up YouTube videos myself, and there's sometimes I thumbs up a YouTube video. Sometimes. But it's got to be, yeah. But again, it's just not something that someone normally thinks to do. It's just, it's all good. Other than that, ladies and gentlemen, that's all I got for you guys today. Stay green. That's all I can say. Last little few words of advice before I head out the door is the longer you trade, the more you realize it's really just not even about. It's not about trying to make money. It's really about trying to not lose money, if that makes sense. So again, it's start thinking about risk, not reward, and you'll find yourself in winning trades. And the reason being is because professionals, hedge funds, everybody who's a good trader calculates risk before reward. If you calculate risk and enter trades based on risk, you'll enter with professional markets. Professional markets have all the money, they move all the money, they don't like to lose money. So if you start to enter based on risk, you'll enter with pros. Pros don't like to lose money, they have the money to move the market, they will move the market away from their entry points so they can make money, which means you make money. If you trade based on reward, looking for profit, you're going to look for stocks that are moving, which means you're buying right into the big sellers, which are selling because they calculate on risk. So again, don't look for profit, look for risk. All right, guys. Everybody have a great day. Take care, and I'll see you guys not tomorrow, on Monday. Almost had me there. But not today. Not today. You'll see me on Monday. Oh, by the way, the scanners will not be online today. There's an issue going on with my Trade Ideas account. So that you guys know that I'm not lying to you or just making up some bullshit story, let me break it down for you. Basically, I have 2 subscriptions on Trade Ideas. One to run online to YouTube and one to keep up on my trading computer when we're live in our private group. The other day, somehow Trade Ideas wouldn't open on my computer, so then I had to uninstall it and reinstall it. Upon doing that, it deleted my username and my password out of that account. So somehow both the accounts are linked to the same account. So then when I log into one account, it shuts off the other account. So I'm back and forth with Trade Ideas trying to get that resolved. When that happens, scanners will be back online. Okay. Have a good day.